Hello traders, this is Marbob6. I wanted to go over the technicals on the S&P 500 after printing new all-time highs, despite many doomsday callers since 2022, 2023, 2024, and the numbers continues to go higher, right? This is where Mother Market teaches a lesson we never learn. However, here we are on the S&P trading currently 54 and 43 currently, with the highs of 54 and 53 for the daily session. There are still a few hours left before the session concludes. I wanted to bring the analysis on the S&P based on the weekly before moving into the current information on the daily. To start with the weekly time interval, there is a pending that we were tracking on a previous room. However, now in our current room, we're focusing on the technicals alone, right? We remove all the noise and continue to trade and act accordingly. By the way, none of these represent financial advice, but rather an interpretation of the technical information. Where we are now on the S&P 500, right? Here we printed the cycle lows at 3,500. You guys know that many moves tend to terminate at extensions of prior swings, which to me is now funny that many doomsday scenarios were presented previously. However, now that we are at current highs, many of those falls are adjusting to new information, which is fine. However, we have been clearly within an uptrend on the S&P 500, correct? Continues to build higher highs and higher lows, right? Definition of an uptrend. Now, how high can we go? You guys probably are seeing around the space. For many people are calling now 6,000, 5,600, which is quite obvious, right? But why not making those calls at these lows where we would like to present the technical information that we may be getting into here? As you guys can observe, we have been tracking clearly those levels. If I revisit a chart from November of last year, this one was our technical proposition back then, right? From the X to the A, based on the weekly structure, once again, we got this pending formation back then as an ABCD, a bearish butterfly, also within the symmetrical pattern, right? Conventional structure here with the height of the wedge, right? As projections, the height of the wedge will lead us to the 1.618, the golden ratio for the 1.618 for what it was back then. Once again, a pending formation. Despite all the many crash callers, we're now nearing those projections, okay? So now revisiting our chart, current information, once again, this is where we are on the S&P 500, okay? So to redraw that idea, we are connecting all the data points from X to A, discernible high, discernible low, back to discernible high, right? From July also, that was another pending formation back then at 4,600. Back to the lows that serve us as a C leg of the move with the projected move towards the 1.618. Can we go there? At this point, we are pretty close that we can achieve these levels, and this will be the completion point of the bearish butterfly 1.618 that we presented last year also, okay? Once again, to reconstruct prior events that can take place on future price development as part of forensic analytics that we used to work on, right? Because we like to talk with facts here, not ideas that never come. So here are the wedge of the symmetrical formation, right? To make confluence with the projected move for this bearish butterfly that now is nearly those levels, okay? Once again, the projection was made already last year in November, okay? And now we are nearing those levels, okay? This is how we approach the technicals. And if you guys are interested in this type of technique, you guys can visit our room. Everything is detailed in the YouTube channel, okay? As well as marbob6.com, where we approach the technicals with an unbiased perspective. So now that we are near those levels, the main projection, this can cause some turbulences in between, right? So the main projection that we're still also tracking remains for the major reciprocal ABCD, also presented in December of 2022. Once again, despite all the doom and glooms, we're still heading or respecting that trajectory. Can we achieve those levels? We will see. Nothing is certain in this game, right? And we act accordingly, right? So now this will correspond for the monthly time frame, right? Because that is a major ABCD formation based once again on the monthly. So if I reconstruct, okay, that same event, we need to jump into our current chart. Okay, that idea was presented, you guys can observe here, December 5th of 2022, where everything started about the doom calls, right? Crash here. We never achieved those levels, right? We never broke below the support, the Dow theory support at 50% correction, meaning that a 50% correction of the primary trend, for those unfamiliar or are unaware of what is a 50% correction of the primary trend, primary trends are normally found within weekly and monthly timeframes, right? That was a many Wall Street analysts got confused or misled others, right, with their projections. We respect the technicals based on the legends of the past that continues to repeat over and over. Of course, they're not 100% accurate, but overall, we do know that the consistency is there when it's drawn and projected properly and accordingly, okay? So that measure move, right, that ABCD reciprocal is still in track also for the 6,000 region on the S&P 500. Can we go there? We will see, guys. We're only acting here upon the information. The 200% will be pretty much the same projection that was made nearly 2 years ago, okay? Or at least 1.5 years now at this point, where many were only concentrated for the crash that never came. Again, I'm not saying we're not going to see those turbulences, but it's very important to act and move accordingly, right? So now we are still on track. You guys can observe pretty much from the lows, we're still on track, okay? So this will be for the monthly, the same projections within the 66,000 and 63,000 region, which is, or 6,300 region, okay? My apologies. Was getting confused with the price action on BTC. With this, my friends, what is very important to know is that now those same doomsday scenarios are now having higher levels within the price action on the S&P, which is pretty common, right? The mother market will always teach us a lesson. However, what we want to do is respect the harmonic ratios in the proper manner. So as of now, everything continues to be the same, right? On the daily, the projections once again remains for our bearish butterfly, pending bearish butterfly, based on the weekly formation that was again previously presented in advance with all the harmonic ratios presented back then, right? The 5600 region is the one that we're near after printing new all-time highs, and from there on we'll track within our room. Everyone, thank you for watching this video, and we will continue to present technical arguments that I hope it helps everyone who is interested in this field in the proper manner to achieve technical edge. I'll see you guys on the next one. Cheers.